Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Wednesday, September 17th, 2025. Let's take a look at the charts. I want to show a weekly chart, but we don't show it here. So we had, if you may recall, a 2.5-year channel top that we settled above about a month and a half ago, and 2 weeks later back below. And it was that back below that channel structure that set up 148.94 as a possible 1 to 2 month downside objective. And we're still operating under that assumption so long as we continue trading below 178.88, which you can see here. This is our 4-star resistance, descending a 1 month, 1.5 month almost channel top, able to contain buying not only for the week itself, but into October from here or below which we came very close to testing it late last week. We can fall to channel support, which I don't even have noted right now. But what I do want to note, if you look at this chart carefully, you can see that the channel bottom is continuing south. And by the next 3 or 4 weeks, it actually converges with 148.94 anyway. So this is just another way of saying that holding below 178.88 will keep the 148.94 formation in reach over the next 3 to 5 weeks. On the way down, we do have this meaningful rising 1/3 speed line. At the time, we didn't have weighted, we were playing a sell signal below a horizontal channel structure, if you may recall, that we quickly then closed back above, and in the final analysis, it was the 1/3 speed line that held. And so 170.65 is our downward pivot point. So if you're not short or reluctant to go short at 178.88, then your next short play, if you're a 2 to 3 or 3 to 5 week swing trader, would be a settlement below 170.65. Or maybe you're somewhat short right now, a 3 to 5 week swing trade, and looking to go short more, add to that short position. That would come with a settlement below 170.65. And then we are probably 3 to 5 weeks away from reaching 148.94. 148.94 is a former 1-year channel top we settled above about 3 months ago, indicating the lower 180s, if you recall. It can, if tested, 148.94, contain selling through the rest of the year. And from here, we can round up to new highs following a test of 148.94. Once again, anticipating 148.94, I'm going to say by the end of October, holding below 178.88, and a little sooner than that if we close today below 170.65. And that is kind of it in a nutshell. Now, if you're a 3 to 5 day swing trader, you can actually sell 178.88 and buy 170.65. You could go long at 170.65 and take profits at 178.88. You can go short at 178.88 and take profits at 170.65. It is about as simple as that. If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time. If we happen to close today above 178.88, this 185.82 former 5-month channel bottom, then I'm going to call this a 3 to 5 day target. On the way up, we've got all these minor points carefully chosen, well suited for day traders, 183.16 being the most meaningful of them. It is the high settlement price on the daily chart that was put out back in earlier August. That could stall this market for a day on the way up to 185.82. Closing above 178.88, 185.82 is likely within 3 to 5 days. Within a couple of weeks, 192.28, stair-step fashion. But really, in terms of the big picture, a closing above 178.88 does set up over the next 2 to 3 months the 219.64 full wave count from the January 25 high against the April low, subtracting the April low from the January high and adding it back to the January high. You have the full wave that becomes an objective over the next 2 to 3 months if we close above 178.88. It is about as simple as that. Working our way down today, I'm looking for minor points, and I'm kind of combing through the charts here. We do have 174.09. That is a 3/8 downside Fibonacci over the last couple of weeks, and we've come close to testing it the last couple of days. It can contain intraday selling pressures, above which we can test 178.88 intraday. So this in itself is a day trade. I'd rather sell 178.88 than buy outright 174.09 because of the bearish nature I see playing out likely over the coming weeks below 178.88, but that's entirely up to you. If we break 174.09 today, we actually could test 170.65 today, which is once again this rising 1/3 speed line that we tested a week and a half ago or so. It can contain selling for the week itself, and from here, once again, we can round up to the 178.08 channel top within 3 to 5 days. So this is still a 3 to 5 day dynamic, but if we close below 170.65, that is really the final shoe to drop on a meaningful sell signal that I would expect to play out into October, 148.94, likely then within 3 to 5 weeks, where we could bottom out through the rest of the year. I think I've said it all. I do want to mention that on Tuesday, wickedstocks.com put out a stock pick on Eli Lilly. You can see it for free by going to wickedstocks.com and taking advantage of our 5-day free trial. You'll also then receive our second stock pick of the week on Thursday. We put 2 out every week. Daily triple Q analysis, daily SPY analysis will be at your disposal, so forth and so on. I don't have a triple Q chart on here anymore because there's only so much room in the newsletter. So please click like and share. I'm going to leave it at that for Wednesday's daily NVIDIA report, and you have a great day.